All right, what's up, everyone? We're going to talk about the difference between professional trading, non-professional trading, and then I'm going to talk about something else, something you should watch out for in the future. So make sure to stick to the end because I'm going to talk about that too. So professional trading and non-professional trading. A lot of people tend to call themselves professional traders. It's not as simple as that. You can't be profitable and just call yourself a professional trader. There's a lot more that goes into it. So I'm going to break that down right now. So let's get started with non-professional trading. Non-professional traders is probably the majority of traders right now. And it basically means that you're trading from home. You're not really set to an office. You don't have necessarily like your own desk where you have to be. It's more so lifestyle oriented. So it's more focused on being able to live your life and then trade instead of trading and then having a life outside of that. And it's flexible, right? So that means that it's more, well, it kind of ties into freedom too. It's more optimized towards freedom and flexibility. For example, being a swing trader, trading for, let's say, 2 hours a week or 2 hours a month even, and then having either a 9 to 5 job or traveling or a side hustle, whatever. And it's more so for people who don't really want to make a career in trading, but more so use it to gain freedom. So you don't really want to be a professional trader. You don't want to actually maximize a firm's returns or anything like that. You just want to make money from the markets, and you want to have freedom and flexibility while you're at it. Then the opposite thing is professional trading. And professional trading is a whole different ballpark. It is not comparable to non-professional trading. It is there's a pretty big difference, and it brings with it a lot more stress too. So when you're thinking about professional trader, you're thinking about investment firms, hedge funds, or people or a group of people who manage significant capital. It's usually being done from an office with a dedicated risk manager and a team, whereas non-professional trader is usually done from home or from anywhere else in the world. And professional trader is usually done from an office with a team. You actually have meetings about certain things too, like about what risk to allocate to a certain trader, and I'll explain that in a second. So the goal for a professional trading firm or a professional trader is not to maximize the returns necessarily. It is to minimize drawdown and to offer diversification for investors. See, if the investors are investing in just the S&P, their returns could look like this. For example, they could have a 30% year, then a negative 18% year, followed by a 45% year. Not 45 is a little high, let's say 40% year, followed by a negative 22% year, but eventually averaging around 10 to 12% a year. So you can kind of see how this fluctuates a lot, right? You have either minus 18% or plus 30%, right? So it's not that stable. At the end of like 10, 20 years, yes, you'll have an average of 10%. But the goal of trading firms is essentially to minimize that drawdown, and in doing so, offering diversification for investors. So let's say you get an 18% year and then you have a losing year, but that losing year is only 2.5%, followed by, let's say, a 21% year, and let's say a 16% year, and then a losing year of only negative 4%. That's the goal for professional trading firms. It is not to beat the S&P every single year, or beat like insanely high returns. It is to minimize drawdown, to offer diversification for investors, and basically grow their capital in the long term. It is regulated, meaning that you have to have a permit in order to be able to do it. You work in teams. You have strategy allocation, and what I mean by that is, let's say you have a firm that has, let's do, for example, 1 billion AUM. So that means 1 billion AUM. That means assets under management. You'll basically analyze market cycles. Let's say we're in a ranging phase right now. Let's say ranging, then team A, who trades ranges, will get more allocation, meaning they will get more money to trade with. Let's say we're in a really trending phase, then team B might get more allocation in a trending phase because that's their strong edge. Then if we're having a lot of breakouts, for example, you might have team C and they'll take over with, breakouts. You get the point, right? Strategy allocation too. Not everyone's trading the exact same strategy in a trading firm, because it's a team, right? It's a team of 10, 20, 30 traders, whatever, and they all use a different strategy that operates in different market cycles, so they'll get different allocation with each market cycle. It is not uncommon for professional trading firms to have losing quarters either. Whereas, social media makes it seem like you can have $1 million every single month from trading from home, or 20 to 30 R every single month. No. Professional firms, the real professional firms, the people who are, trading from the office, they have losing quarters for sure. And there's no way around that. And it's a professional environment too. It's not this whole mumbo jumbo clown shit that you see on Instagram. It is an actual professional environment. It's a real career. It's been a real industry for hundreds of years. Unfortunately, it's been kind of ruined by the social media gurus, which I'll talk about in a second. But just know that if you do want to go into professional trading, there's a big difference between professional trading and non-professional trading. You'll have a lot less freedom if you do this. You won't have nearly as much freedom as you will when you're not a professional trader. You'll have, in my opinion, a lot more stress because you're managing way larger capital. We're talking about 7 or 8 figures here, which is usually not what you're managing when you're managing your own funds. And it does, like I said, it does take up a lot of time. You have a risk management. You have to be able to always be in a proper mindset. You cannot afford to blow an account. It doesn't work like that. It's not like a prop firm challenge or anything. You can't blow the account, because if you blow the account, you're losing the firm a lot of money and you're most definitely going to get fired. Now, there's one more form of trading that I want to talk about, but before I do that, make sure that if you do want to end up in professional trading, that you take it slowly. Look for internships. Try and see if there's anything you can do. Try and see if you can just hop along, see how they operate, because it is a whole different ballpark. And I don't even have that much experience in it. My colleague does, but I don't have that much experience in it. But I know from the experience that I do have that it can be extremely stressful and extremely exhausting. And non-professional trading is definitely way better suited for the majority of people, especially for the people who want to, for example, start side hustles and stuff like that. And there's one more form of trading, and that's the fake bullshit trading method. And this is what you see on Instagram and TikTok and YouTube and whatever, even though I'm on YouTube right now. 20R every month, flipping your account from $200 to $2,000 in 2 months. Don't believe that shit. Don't buy into that shit. This is bullshit. Now, our goal with Simple Markets is to bring realism and transparency back into the industry, and to talk about the way that trading used to be 30, 40 years ago, and not all this quick flip bullshit. If someone cannot show you a trading journal, a track record, or payout proof, there is no reason to pay them for a mentorship or anything. You don't want to learn how to play piano from someone who has not showed you that they can play piano, right? I mean, I would not want to learn how to play piano from someone who doesn't even know how to play piano, or can at least show me to play the piano. So make sure that whoever you're following, I don't think a mentorship is necessarily a bad thing, right? Being an entrepreneur myself, I think a mentorship, if you're a trader, eventually it's just diversification of income, and it's also providing guidance and giving back to the community. I don't think a mentorship is a bad thing. I think, because I do offer it myself, so I'd be kind of hypocritical if I do, if I said that it was a bad thing. But I think if you do end up buying a mentorship, make sure that your mentor has proof of profitability, whether it be a prop firm payout, a journal, track record, whatever. And that's not to say that I do have it and you should buy my community. No, I'm saying in general, don't fall for the $200 to $2,000 flip, and make sure that if you do end up signing up with someone, that they have proof of profitability. They also make it seem easy, which is really difficult for us when we get new students. We'll get students who believe that they can make 50R every single month because ICT showed them how you could get a 96% win rate. We're not like that. We are totally the opposite. We think that if you do not have the work ethic to put in the backtesting hours, and to collect the data, and to collect the numbers on your strategy, that you need a mindset shift. And of course we can help you with that, but I'm just saying, don't fall for that. I don't want to talk about my own community too much, but like, don't fall for that shit, please. Don't buy into the whole flipping your account or gaining profit within a couple of months, 20R every single month. Don't fall for that. Don't. If you see someone on Instagram with a Lamborghini and a Rolex, run away. You don't want to be there. Because myself, I work in a professional trading firm. I work in a capital management firm. I'm actually recording this video right now from the office too on Sunday night. I'm in my office right now recording that video. It's not the way that they make it seem. It's not easy. It is stressful. I've had a couple of losing months this year. That is stressful to me. There's no way around that. I know that losses are unavoidable, but it is stressful. And I can tell that I have less hair now than when I first started trading. So that should give you an idea of how stressful it is. So anyways, just make sure that you don't fall for that, and make sure that if you do want to end up going into professional trading, that you really consider these things too. Because oftentimes movies like Wolf of Wall Street make it seem very, very fun and very cool, and like you're in some sort of, alpha environment. But to be honest, the majority of people here are pretty stressed out. I mean, we love our job. We wouldn't trade it for the world, but I just know that I'm not going to be doing this for the next 30 years because I just wouldn't be able to handle all the stress for 30 years. And I like it now, and I'll like it in 10 years, 20 years, but in 30 years, I'll probably be a goat farmer or something. So yeah, make sure to consider that if you do want to end up being a professional trader. If you have any questions about professional trading, feel free to reach out to me. I'll either answer your questions myself, or I'll link you through to my colleague who is 49 years old, who has over 20 years of experience trading professionally. And I could also send you to him, and he can help you out too with any questions you may have. Anyways, short little video. I got a couple of questions about that, so I decided to just make a little video about it. Once again, if you have any questions, feel free to reach out to me, and have a good night.